Let's start with a simple question. What is True North Mortgage?
Consider True North Mortgage as a matchmaker.
But what would you advise in the current scenario or current market to people? Should they go for variable or should they go for fixed mortgages?
People have a big misconception that those 5 big banks are the A lenders that we have in the industry. No. We have close to 35 lenders in the industry which are actually recognized by CMHC or NHA, which is the National Housing Act. So 2025 and 2026 are supposed to be the years of renewals because most of the people bought their homes in 2020 and 2021. If on a 5-year fix, for example, if we are able to beat the rate by 10 basis points, which is 0.1%, for the next 5 years for a $500,000 mortgage, you're saving close to $2,400. I think there's a very famous saying, it says, loyalty comes at a cost. So if you have been with XYZ bank from a very long duration of time, sometimes the bank, maybe they think or maybe they know that you'll not be shopping around.
Did you know that choosing the wrong mortgage could cost you tens of thousands of dollars over time? It's one of the biggest financial decisions most of us will ever make. Yet so many people walk into it blind. In today's episode, we are joined by Himalaya from True North Mortgage to cut through the confusion from first-time buyer questions to the myths that keep people stuck. By the end, you will have a clearer picture of how to make smarter moves with your mortgage. And if you haven't yet subscribed to the channel, please consider doing so as it really means a lot to me. And now let's dive right in with Himalaya. Hello and welcome to today's episode, Himalaya.
Thank you, Neha. Thank you for having us.
Yeah, how are you doing?
Things are good.
Okay.
Living the dream life in Calgary.
For sure. So let's dive right into it.
Okay.
But let's start with a simple question. What is True North Mortgage for people who don't know?
Okay. So consider True North Mortgage as a matchmaker. So on the basis of client's requirement, we are going to shop around for you guys and then get the best deal out of all the lenders that we have on the platform. So we have been a brokerage from the last 19 years now, and we have helped a lot of clients. Plus our 16,000 5-star reviews actually helps in giving that
Definitely.
satisfaction and comfort to our future prospective clients.
Right. But how is it different from a regular traditional bank?
So when it comes to traditional banks, those financial advisors are only able to assist you with their own products. But being a brokerage, it actually allows us to compare all the options available across multiple financial institutions that we have on the platform. So we don't have any inclination towards one particular bank or a financial institution. So जो बेस्ट ऑप्शन है, जो वायबल ऑप्शन है फॉर द क्लाइंट्स, वो हम क्लाइंट्स को फिर प्रेजेंट करते हैं.
Okay. How many approximate options do you have?
So we have close to 20 plus lenders on the prime side and then close to 20-25 lenders on the alternate side.
Okay. So it kinds of explains like why would one want to go with True North, but can you share in detail like why would someone choose True North over traditional bank?
Okay, so I'll give you a quick example over here. Let's say when you go to a bank, they're only able to offer you a particular product, right? Maybe that product is not suitable for you. Maybe that product is not the best offer for you. But when you come to a brokerage, now since we have a gamut of lenders and a gamut of products, it makes us pretty much very easy to have those, tailored made solutions for the clients. So it's not only about the rates, it's also about the product feasibility for the client. For example, if a client comes in and he says that Himalaya, I might be selling my property in the next 5 years. I'm not. There is no point of giving an option of a 5-year fix. I might give an option on a 5-year variable or maybe a 3-year fix. So it all depends on the client's requirement, and that's how we do as well. We try to make sure that we are understanding on the client's goals and then presenting some solutions to them.
Right. So it is very tailor-made and specific to your needs.
Correct.
Okay. But still, what are some of the biggest myths people or Canadians would have if you compare it with lenders, brokerages, and traditional
I think the biggest myth that the people have that brokerages or brokers are actually more costly. It's the complete opposite. Maybe 1 out of 100 times we are not able to meet or match the rates that your current lender is offering or your current bank is offering, but most of the times you are able to beat those rates. So सबसे बड़ा myth यही है कि ब्रोकर के पास जाना तो मेहनत का काम है, प्लस they'll be asking for a lot of documentation. And I always say, I'll give you an example. If on a 5-year fix, for example, if we are able to beat the rate by 10 basis points, which is 0.1%, for a $100,000 mortgage, you are able to save $477. For the next 5 years, for a $500,000 mortgage, you're saving close to $2,400. So by putting half an hour additional effort of submitting those documents or maybe shopping around, you're saving $2,400, which is, let's say, if in case it's a purchase, you're saving the legal fees, right? You're saving the lawyer fees,
Right.
right?
But is it true that there is a lot more documentation needed when you come to brokerages compared to banks?
It's a myth. So every lender has a different guideline when it comes to documentation. So, for example, the OSFI regulation says that we have to get 90 days of bank statements for the down payment confirmation. It's going to be remaining the same for all the lenders that we have on the platform, right? Now, in the last few months, in the last few years, lenders have actually been more regulated in terms of AML and compliance. So they want to make sure that whatever the money is coming in the bank account, it's being fully sourced out. So we need to know the source of funds. Sometimes maybe there is a financial advisor, maybe there is a lender who is overlooking one of the transactions, but majority of the lenders, they want to make sure to tick mark all the compliance requirements.
Right.
Right. Income documents still remain the same throughout the industry. It's never going to change.
Okay.
Right.
But you mentioned OSFI. What is this?
So OSFI is the regulatory body. It's a provincial body which actually regulates all the financial institutions. So it just not regulates on the mortgage side. They also regulate on check-in account, savings account. So they have a different department for the mortgages, and they want to make sure that all the lenders are following the same guidelines.
Okay.
Plus, uske baad, when it comes to provincially, every province will have a different regulatory body for real estate market and for the mortgage industry. So we have RECA over here in Alberta, we have FSRA in Ontario. So they overlook all the guidelines and they overlook all the lenders that the lenders are following from the compliance perspective. The lenders are managing everything properly behind the scenes as well.
Right.
Right.
Okay. So there is this misconception that banks offer better rates than mortgage brokers. Is that true?
Maybe once in a while, yes. So some lenders, based on their books, they might come up with a promotional offer. But at the same time, if in case we have that lender on the platform, we'll also pass on that benefit to our clients because we want to make sure that we are earning your business. From the bank's perspective, they want to keep your business. Let's say if you're banking with Scotiabank from the last couple of odd years, for them, it's keeping the business. But for us, it's very different. We want to earn your business by giving you a better deal. Right. So in some cases, they'll come up with the promotional offers, but at the same time, that options is actually available through us as well, through the broker channel. Now, whenever you're looking at the rates, majority of the times people are only looking at the numeral figure that my bank is giving 3.79 or 3.89. But they're not looking at the conditions as well. Maybe maybe one of the condition is that you have to put the mortgage amount has to be more than $500,000. Or let's say there is a condition that you cannot sell the property in the next 5 years. Maybe there is a condition that has to be an owner-occupied property, right? And the down payment has to be less than 20%. So there are certain flashy ads, 100% I agree, that we see on the websites or on the public domain. But at the same time, we need to make sure that all the conditions, look at the conditions as well.
Do they usually disclose all these conditions?
So it's similar to up to 50% off, and you'll see a small asterisk,
Right.
just besides 50%. So yes, they disclose because they have to disclose as per the guidelines, but it should be on the bottom of the website or maybe something else, or maybe a document that they're sharing with the clients at that time.
Okay.
Right.
So if someone were to come to True North Mortgage to apply for a mortgage. How is the usual process?
So we keep it very simple. We don't try to overwhelm the clients. Our goal is that we want to understand what the client is looking for. And after discussing their goals, we come up with the solutions for them. Then we start collecting the documents, submit an application to the lender, and then once we have an approval in place, we guide them through the whole paperwork, the whole process. As this is how it's going to be looking like in terms of the legal process, how it looks like. For example, in a purchase, once the mortgage is fully approved, the instructions are sent to the lawyer, the client's lawyer, and then they take care of everything behind the scenes. So they make sure that the identity verification is being done. They make sure that the title transfer from the current homeowner is being transferred to the new homeowner. They want to make sure that the taxes are up to date. So we keep our clients informed so that nothing comes as a surprise for them in this whole transaction.
But how long does it usually take?
So it depends on the situation. So for a purchase, it's somewhere between 4 to 7 business days to get a full approval in place. Refinances can take a little bit longer depending on the lender that we are going for, since an appraisal is also required. So it might add 1 or 2 days additional.
Okay. And if, let's say, I want to buy a property and I come to you for mortgage, are you also able to give me soft approval? By soft, I mean just saying that, yeah, it will be approved.
So there is something called pre-qualification and there is something called pre-approval. So pre-qualification is something that we do on the basis of what you're informing us. But that's not a soft approval. Without seeing the documents, without seeing the credit report, it's very difficult for us to commit that, yes, sir, you do qualify, or yes, ma'am, you do qualify for $400,000, right? Plus, at the same time, from the lender's perspective, it's not only about the client's credit worthiness or the client's profile. For them, property is an investment vehicle. So they want to make sure that the property is worthy as well. So sometimes when we give a pre-approval for $400,000, clients put an unconditional offer, but they forget it's not only about us, it's also about the property. Is the property even worth 400,000? Maybe no. Does the property has some certain discrepancies where the lender might not be comfortable? Maybe the property is not marketable enough. So whenever a client is putting an offer, I always recommend to put 5 days of financing and 5 days of inspection. So 5 days of financing actually allows us to get a full approval in place, getting the application submitted to the lender. If in case we are putting less than 20% down payment, making sure that insurer is on board, and then the documents to be reviewed by the lender. Once everything is done, we inform our clients that our financing is good. You're good to remove the financing conditions. Why inspection? I always recommend, because we are not experts, right?
Definitely.
So by just having a quick look at the property, you can never understand whether the property has certain deficiencies. So a good, healthy, expert, professional inspection to be done, which allows us to understand what's the current health of the property. So these two conditions are for the buyer's benefit. We want to make sure that if something happens and the property is not healthy enough, if the property has multiple deficiencies, maybe you can negotiate with the seller in terms of purchase price, right? Or maybe you can back out. So this allows us to guarantee or safeguard the deposit that you have put towards a purchase.
Definitely. But mostly, maybe there are people who are first time home buyers or not very thorough with all the conditions and everything. For them, how do they make sure, or are there any hidden charges or hidden conditions that they should look out for?
So I think whenever you're buying the first home, it's the biggest asset of your life, right? So you want to make sure that you don't get stuck into it. So by hiring a good realtor and by talking to a good expert mortgage broker, things get streamlined in a lot more senses that we can actually imagine of. So a good realtor will always make sure that my client's benefit comes first for me. For the mortgage broker, it's the same thing. Now, when it comes to charges, I always inform that there are a couple of hidden costs. There are a couple, not hidden exactly, but
Or
in
they
terms
get
of,
missed, you know?
right. It's not about getting missed. So, for example, sometimes people think that I have to put 5% down. So, let's say I have $15,000 available, and 15,000 is going towards my down payment. But people forget that I have to spend on the lawyer as well, right? I might have to spend on moving as well, right? So in Alberta, we don't have any land transfer charges, but provinces like Ontario, BC, they have land transfer taxes as well. So it's close to what we take in consideration is 1.5%. This is what we term as at closing cost. So closing cost means to close this particular transaction, you have to have this much amount of money. And majority of the lenders, when they are giving an approval, they want to make sure that the clients have enough money as well. Getting an approval doesn't mean that you're able to close the transaction. Your lawyer takes care of everything, and after that, once everything has been finalized, that's how we close the transaction. To get that transaction closed, the closing cost will make sure that you have sufficient funds, and that's how lenders want to make sure as well.
Okay. But after purchasing the home, when it is time to renew the mortgage, do you have to again submit all the documents and prove your income, or there is no need?
So when it comes to an existing lender, majority of the times they won't even ask for your credit reports or income documents. But if you're planning to switch to another lender, for them it's a brand new application. So they will ask for credit report, they'll ask for the income documents, they'll ask for your current, if in case you have any other properties involved, they'll ask for those documents as well.
So that will be like doing a all fresh mortgage altogether.
Correct.
Okay. So if someone was to sell their home, is there an option to transfer or port their mortgage?
Correct. So majority of the lenders, yes, they offer porting. So there are three different types of porting. One is a straight port, one is a port decrease, and one is a port increase. So in layman terms, when you're keeping the same mortgage amount, it's straight port. When you're decreasing the mortgage amount, it's port decrease. When you're increasing the mortgage amount, it's port increase. Simple. Now, yes, porting is possible with majority of the lenders, but we also have to understand that the new property that you're shifting to or you want to port the mortgage to, it must be qualified as per the lender guidelines, right? So for example, there are some lenders who are okay with agricultural zone properties, but some lenders aren't, right? So when you're porting the mortgage, always check with the broker or always check with the lender whether they are okay with that particular property or not, whether they are okay with agricultural zone property or whether they are okay with country residential or maybe acreages.
So you have to do your due diligence.
Correct. So whenever you're hiring a mortgage broker, they will actually understand whether that property is actually falling under the lender guidelines or not.
Okay.
All right.
They would know.
Correct. So even if you got a mortgage through one of the big banks, it was sourced by one of the brokers in the industry, reach out to that broker because that broker understands that lender's guidelines as well. They will make sure that if in case you are planning to port the mortgage, they'll make sure whether it is doable or not.
Okay.
Right.
But even though, mostly people would buy within the community or within the city limits, it is still advisable to...
Correct. Always advisable. It's not only about the property zoning, it's always about property marketability. So at certain point of time, we used to have post-tension cables in some of the condos in Calgary, some of the condos in BC. Majority of the lenders, they're not okay with it. So it's just an example. Even though the property lies in the city limits, is always important to make sure that the property is falling under the lender's guidelines.
Right. What should people know about the penalties and collateral mortgages?
Okay. So when it comes to penalties, it's very simple on the variable side. It's 3 months of interest. Some lenders will be charging 3 months of interest based on the contract rate that you have. Some lenders will be charging on the basis of prime rate. So that's one of the conditions that I always recommend to see the fine print, whether the penalties are going to be in terms of prime rate or your actual contract rate. Fixed rates can be a little tricky, and I always inform my clients to make sure that whenever you're going for fixed rates, please inform your goals as well. Quick example. Let's say you went for a 4% for a 5-year fixed rate. 2 years down the line, you're planning to sell the property. Something happened, or maybe you're upgrading, maybe you're downgrading, or maybe you just want to sell off the property because you're getting a very decent price for it, right? Now, from the lender's perspective, there can be two scenarios. Let's say, first scenario, the interest rate is at 5%. Lenders are very happy because now they can lend the same amount of money at a higher interest rate. So they only charge you 3 months of interest on your contract rate, right? On the other hand, when the rate has suddenly dropped down to 3%, from the lender's perspective, that's an opportunity loss for them, right? So they'll be charging you something called interest rate differential, so which can be significantly higher. I've seen some of the clients going for 5.5%, 6% back in 23, 24. Now to pay off the mortgage, they have to pay $25,000, $30,000 of penalties. We haven't seen even that sort of appreciation in the last 2 years, right? So always make sure that to discuss your goals that you have, to discuss those opportunities, so that at least the broker can suggest and make you aware how the penalty system works. On the collateral charge, majority of the banks, when it comes to readvanceable mortgages, they actually do collateral charges. So collateral charges, I'll give you an example. Let's say, even if you're getting a mortgage of $400,000, the property value came out to be $500,000. Lenders can put 125% of your property value as a charge on the title. I know it seems that why are they putting a higher charge? But at the same time, let's say they are expecting that the value of the property will actually grow in the next couple of 40 years, and maybe your requirements will also change. So having a collateral charge on the title actually allows you to refinance without any legal cost. So they've already put a charge of $625. Your mortgage was $400,000. Maybe the value became $700,000 in the next 5 years. Now you don't have to go through the whole paperwork of hiring a lawyer or going through First Canadian Title or FNF to do the transaction, and the branch advisor or the branch can actually help you with the refinance without any legal cost. So collateral charge has an upside. At the downside, if in case you're looking for a second mortgage for a shorter duration of time, majority of the lenders will not be comfortable if in case we don't have enough equity in the property. For example, if the property value is at $700,000, your mortgage amount is sitting at $350,000. From your perspective, you're sitting at 50% loan to value. You have enough equity in the property. But on that charge, on the title, the charge amount is at $625,000, which brings it down to almost 90% loan to value. So nobody would like to give you another $30,000 or $40,000 or $50,000 additional loan. So both the collateral charge and a standard charge both have their different pros and cons, but it's good to have, especially if in case you're expecting a decent appreciation in the property in the next few years and you think that your requirements might change. Some things are foreseeable, some things are unforeseeable. So it's a good product to have.
Okay. It's just like, layman or regular general people who just buy mortgage once in 5 years, 10 years. It's so difficult to keep track of all this or to educate yourself on all these products.
Correct.
But also, on the contrary, you have to know your goals. Like, what am I going to do in the next 5 years? What area my property is in? How the appreciation value has been? And then decide.
Correct. I think when we are buying a property, our most important aspect that we'll look at is from the client's perspective, that we want to buy a property, right? We want to get the transaction closed. But sometimes we forget that there are certain expenses that you can actually foresee. For example, whenever you're buying a new property, maybe you have to furnish the home. Maybe you have to get a couch. Maybe you have to get a television set. There are some expenses which can be unforeseeable. Maybe something happened in the next 1 year and then you have to repair the whole roofing system, right? So you have to have some sort of contingency funds So whenever you're putting a down payment, I always say keep some amount as a backup plan, as a fallback plan. Maybe unfortunately one of the applicants, they don't get, they're not still employed, right? Maybe they lose their job in the next 6 months or 12 months. So you want to make sure that you have enough fallback plan so that you're not missing out on your mortgage payments.
Right. And I think most people miss this part
Right.
and they'll just extend their budget, like
Correct.
really tighten up because you buy a house once and you're not going to do this all over again. So
Correct.
just stretch it a little.
Correct. Now, OSFI always knows that even if, let's say, we are giving a pre-qualification numbers of $400,000, they're making sure that you don't qualify or we don't qualify the clients at the actual rate. So OSFI guideline says they have something called stress test or the benchmark test. So which means whatever rate that you're getting plus 2%, we have to qualify the rate, qualify the client at. The reason why back in 2021, we saw rates at 1.5%, 2%. But suddenly now the rates are sitting at close to 4%, right? So are those clients at the time of renewal, whether they'll be able to manage their mortgage payments or not? OSFI has already thought that in advance. So they want to make sure if something happens in the future, people are not missing out on their mortgage payments.
Right. So some homework is done at the back end as well.
Correct.
How do you help different categories of people, like some self-employed, some are newcomers, new immigrants? How do you help them?
So for new to Canada, every lender has a different product, and majority of the lenders, they do have some of the other options when it comes to newcomers, because this country is based on immigrants, right?
Yeah.
Insurers, we have 3 insurers in Canada. One is CMHC, which is a public group. Then we have Sagen, then we have Canada Guarantee. So all these 3 insurers, they have different products for newcomers. A little bit tweak in the guidelines and you can decide which insurer to go with. We as a mortgage broker, we don't have any control whether we have to send the file to CMHC or CG or maybe Sagen. This is something which is decided by the lender directly. So lender, once they are underwriting the file, once the review is happening of an application, they make sure that they are sending it to the right insurer. Right. Just a quick example. For Sagen, they don't have any guidelines when it comes to how much time you have to have spent as a employed or salaried worker in Canada. CMHC and CG, on the other hand, they require at least 3 months of employment in Canada, right? So once you're dealing with a good mortgage broker and a good lender, they'll ensure that the file is being sent to the proper insurer.
Okay.
Right.
Which is good to know. But on the contrary of new immigrants, how about people who have bad credit score or maybe filed bankruptcy? How do you help them?
So as a broker, we don't only work with the prime lenders, which big banks or some of the monoline lenders that we have on the platform. We also have access to alternate lenders. Generally, people call it B lenders or private lenders, so we call them alternate lenders. So some of the alternate lenders, they are very much comfortable with bruised credit or lower credit, or maybe they are okay in considering or taking exceptions for a different source of income. For example, tips, different gigs, right? Some people, for example, if they are self-employed, they're not taking enough money as a salary or a dividend from their corporation, but they have a huge deposit or retained earnings in the corporation financials, right? So alternate lenders, they are a little bit flexible when it comes to income because their more focus is towards the property equity. They want to make sure that the property, so that's the number one factor for them. They can tweak a little guidelines when it comes to income side, but they want to make sure that the property is marketable enough for them.
Okay.
Right.
So you do have other options
Yes, we do.
available. You also mentioned some people have unique careers who are like on tips or side gigs.
Correct.
Social media, what I do, some people do this full time.
Correct.
And the income is not stable for people who are earning out of this. So do you help them as well?
Yes, we do. So when it comes to self-employment, we have very different variety of lenders. So it's not only based off what you did in the last 2 years, maybe the last 12 months have been super good for your business, right? So we have lenders on the alternate side who can annualize the income taking 3 months of your bank statements, maybe 6 months of your bank statements. Maybe you have a contract coming up, contract signed up, and the transactions are going to flow in the next 3 to 6 months. So lenders on the alternate side, they're just not looking at what you have made in the last 2 years or 3 years or how well established your company is. They're also entertaining the fact how prospective your company can become in the next few months or few years. So they get a little bit more flexible when it comes to that income side.
Okay, this is good to know. Again, you also mentioned that you have some alternate lenders for some unique scenarios. And layman terms, they are usually called B lenders.
Correct.
Sometimes people would also misinterpret mortgage brokers, let's say True North, as B lenders or others.
So I want to clarify that True North Mortgage is actually a brokerage. Yes, we have an in-house lender by the name of Think Financial. People have a big misconception that those 5 big banks are the A lenders that we have in the industry. No. We have close to 35 lenders in the industry which are actually recognized by CMHC or NHA, which is the National Housing Act. So we think big 5 banks are the only A lenders in the market, but we do have other lenders on the platform as well, other lenders in the industry as well. These are all A lenders. Now, I'll give you a quick example. So we have National Bank, which is not part of that big 5, right? Then we have a couple of other monoline lenders. Monoline means they only deal in mortgages. That's their specialty. They don't deal in checking accounts. They don't deal in savings account. They don't deal in credit cards. So the main focus that these lenders have is mortgages only.
Like True North Mortgage?
So Think Financial is one of the monoline lenders. Then we have First National. Then we have CMLS, MCAP, RFA. So we have a couple of monoline lenders in the industry.
So most of the financial institutions, if I say, fall under A lenders.
Correct.
30 is a long list.
Right.
Like top 5 compared to 30 is like...
Correct. When it comes to financial institutions, they might have a different side as well. So every lender, based on their appetite, they'll only explore or they'll only have certain set of options available for the clients. So for example, Think Financial and MCAP, they have their prime side, which is as per the NHA requirement, right? They can help you with 5% down. They can help you with 10% down. But at the same time, these lenders, they also have their alternate side, right? So MCAP, for example, they have an alternate side by the name of Eclipse. Eclipse, what they do is they get a little bit more flexible on the income. The same way that we talk about 12 months of bank statements to understand how the business actually performed in the last 12 months. Maybe your debt to income ratio is a little bit on a higher side, but as per the Eclipse guidelines or as per the alternate guidelines, they fit, right? So if you cannot go on the prime side, we have certain options available on the alternate side, right? Now, alternate side is not only meant for Bruce credit. It's not only meant for, let's say, different self-employment income. It can also vary as per the client's requirement. Let's say, for example, if one of the clients, if they're looking to sell the property in the next 6 months or in the next 3 months, right? But their current lender is not able to offer them an open product, right? Then in those situations, we might explore something on the private side, maybe something on an alternate side, where there is a fully open term available, right? Now, Think Financial, what they do is they have revolutionized the lending industry. They have come up with very different products. So one of the products that they actually launched way back in November 2022, it's a rate relief product. So for the first 6 months of being a homeowner, you want to make sure that your budget is not compromised, right? So they offer a lower rate. Yes, there are some conditions, there are some stipulations around it, but especially in a rate decreasing environment, that's a good product that you can explore. They also come up with a no commitment product. So no commitment is an open variable. So it gets open after 3 months. So let's say if you want to sell the property in the next 6 months, maybe 5 months, maybe 8 months. So you can go for that no commitment mortgage, right? So it becomes fully open. So whenever you're paying off the mortgage or selling the property, there are no penalties involved.
Right. So based on your needs.
Correct.
But somehow when you speak A lenders and B lenders sounds negative.
Correct.
What is the negative side? Why are they called B lenders? Is it only because they serve a particular community and actually nothing wrong with it?
I don't think yes, B sounds a little negative, but so does B positive as well, right? So blood group B positive. But I think when it comes to the mindset of a common man or a general public, hearing that B side becomes a little negative, no doubt about it. But it's not only about which lender you have to go with. It's also about what sort of product that you are looking for, right? Maybe your current situation is not fitting as per the prime lending or the A lending side, right? Maybe you have to go for a B lender for the next couple of odd years. Whenever we are exploring an alternate side, it's not a long-term solution. We don't propose our clients to go for a 5-year term or a 10-year term on the B sides. Even majority of the B lenders or private lenders, they don't have a 5-year term. There are very limited lenders, right? So these lenders, these are short-term solution providers. So just think of that way, that you're bridging the gap for the next 2 years or for the next 3 years. Example, somebody, let's say, filed a consumer proposal and the consumer proposal got discharged last month. To qualify on the prime side, they have to have minimum 2 years of history. But you have to renew a mortgage because your current lender said, no, we won't be renewing you. What's the option? Is selling an option? No. Maybe we can bridge those 2 years with a private or with an alternate lender so that we can bring you back on the prime side. So whenever we are discussing those options with the client, we're not discussing what we have to do right now. We also discuss what's our exit strategy, right? So we want to make sure that you don't get stuck with any lender on the alternate side for a longer duration of time. So we have to have a good exit strategy. We inform our clients. Clients are aware about it so that we take an informed decision.
Right. And usually the interest rate on this would be higher.
Correct.
Okay.
It's a little bit higher than the prime side. Correct.
Okay. Coming back to the mortgage rates. Currently, mortgage rates are a little higher. So, how is the market doing right now?
I think when you compare it to 2020, 2021 or early 2022 rates, yes, the rates are a little bit higher. It has been a very volatile market. We have seen so many factors getting involved or contributing towards the volatility in the market. It's not only because of Russia-Ukraine war, it's also because of what happened in the COVID time. It's also because of what our next door neighbor is actually trying to do, right? So it's very much, we say that we are a different economy, but we are very much dependent on our neighbors, right? So compared to 2020, 2021, yes, the rates are a little bit higher, but we saw rates going back up to close to 6% in 2023 and in 2024. After seeing a lot of stability, our inflation has been controlled, unemployment is still on a little bit higher side. We are seeing some corrections happening. So prime rate in the month of May 2024 was sitting at 7.2%. Now it's sitting at 4.7%. So we have already seen 2.5% corrections on the prime side. Fixed rates were close to 6%. Now they are below 4% levels. So I think it's all about waiting. In the next 6 to 12 months, I think the rates will be close to 3.5 to 3.7% levels. And from my perspective, my opinion, anything between 2.5 to 3.5 on a 5-year side, on a 5-year fix, it's a decent range. That's the interval. Anything below that and anything above 3.5%, it's not going to sustain for a longer duration of time.
Okay, that's good to know. But what would you advise in the current scenario or current market to people? Should they go for variable or should they go for fixed mortgages?
It depends on the client's requirement. If the client says, Himalaya, have found my ever
Dream home.
dream home, I don't want to sell it in the next couple of odd years, I don't have any plans, I've reached that certain point of my life that I don't want to upgrade or I don't want to downgrade, right? And I don't want to take any risk as well, right? So a 5-year fix or a 3-year fix makes more sense for them. If you're a little bit more flexible, if you're open to that risk appetite, a variable actually makes more sense. In my personal opinion, I would actually recommend a 5-year variable,
Yep.
especially given the fact that you have a flexibility of converting to a fixed product without any penalties with the same lender.
Okay,
So
with the
it's all
same
about
lender.
riding it out for the next 6 to 12 months, or maybe it takes 18 months. You never know. If the rates are very much in the same interval, a 5-year fix or a 5-year variable, I would go for a 5-year variable because of the added advantage it carries.
Definitely. And as you mentioned, it might further get corrected and come down.
Correct.
Variable would be the way to go.
Right.
Also, what are the trends that you're seeing with mortgage renewals or refinancing?
So 2025 and 2026 are supposed to be the years of renewals because most of the people bought their homes in 2020 and 2021. So we are seeing a good number of renewals coming up. Um, People who bought their properties in 2020 and 2021, we have seen a lot of people who were not able to manage their finances properly. So we are seeing a lot of refinancing transactions as well. It's not only because of that. I think after the COVID, it's become a little volatile, right? People were not expecting the rates to go up to 5%. We have seen a huge increase in inflation as well. So to cope up with that, people have started utilizing their unsecured debts, right? Maybe a credit card or maybe lines of credit. And those credit cards and those lines of credit are close to 10% for lines of credit or maybe 18, 19% on credit cards. And it's always better if you foresee that you won't be able to pay that off in the next 1 year or maybe 3 years. It's always better to have it consolidated and have one single payment in the mortgage itself.
Yeah, if you have that option.
Correct.
Okay. Mortgage related, that was all my questions. Now, coming back to True North. Wow, you have been here for quite some time now with True North Mortgage. What is the most exciting part, or why do you love working for True North?
So the best part about True North Mortgage is it's open door policy that we have. So if we want to have a discussion with our CEO, Dan Eisner, he's always open, right? He's open to our ideas. He's open to our suggestions. So a couple of products that we have launched in the last few years, there have been suggestions of some of the other agents, right? So working at True North Mortgage, it's a very friendly environment. It's very different than other brokerages or independent brokers that we have in the industry. So we have a good mentoring system. We have a good training system. Let's say if we're hiring a couple of agents in GTA or maybe GVA or maybe on the Atlantic side, so we fly them to Calgary for a week. They stay over here, get mingled up with the agents that we have in our Bow Valley Square office. Plus, they are getting trained by the best mentor that we have in the company, right? So it's not only about the environment, it's also about how good our agents want to become, how good our agents are supposed to become, and that's the support that we have at True North Mortgage.
That is so awesome because, like, having worked in Canada for 10 years almost, this is what works the best, like when you have that open door policy with your management and when they are there to listen to you.
Right.
It makes a huge difference.
Correct.
And just when I was planning this podcast with you, that's when I learned that True North Mortgage is local. It was born in Calgary and started by a Calgarian.
Right.
And it excites me so much because it is local, but also it just inspires so many other people that such big brands are born in Calgary. So if you want to, or if you have a dream, it's totally achievable.
100%. 100%. Now, I think in the last 19 years, we have grown so much. Now, as of now, we have 12 store locations across the country. We have a couple of them in Vancouver, a couple of them here in Calgary, a couple of them in Toronto. We have recently opened our office in Quebec as well. So, and one in Halifax, Bedford. So, plus our agents, we have 3 different teams which operate virtually. So, one is in Calgary, one is in Vancouver, and one is in Toronto. And one is in Windsor as well. We very recently acquired one of the companies. They decided to shut down their operations in Canada, and we decided to hire
Merge
a
with
couple
them.
of agents from their side. So we have one more office in Windsor.
That's exciting, like growing. Much more power to you guys because also you're doing such an amazing job. Just one other question I had. There are some group of people who would, not go to True North Mortgage or any brokerage just for the reason like, oh, I have been with my bank for 10 years. I'm loyal to my bank and there is some loyalty offer. Or I want all my finance to be in one place. I don't want to have like 10 apps or mortgage on another side, banking on other. But actually, like, in my opinion, you're taking a mortgage. It's such a huge amount. You'll never have so much, debt or
Correct.
in any other way. So you should actually be looking at the figures, then convenience.
100%. No, I agree. I think there's a very famous saying. It says, loyalty comes at a cost. So if you have been with XYZ bank from a very long duration of time, sometimes the bank, I'm not saying that everyone is going to be taking you for granted, but at the same time, maybe they think or maybe they know that you'll not be shopping around, right? And it's not about just loyalty. I always say, as long as you are saving money, the whole efforts of providing the documentation, submitting that application, speaking with the broker, it makes sense, right? For a $500,000 mortgage, a 10 basis points close saves you close to $2,400. A 20 basis points gap saves you close to $5,000 over the next 5 years. By spending half an hour or maybe 1 hour in the next 10 days, if you're able to save $5,000, is it not justified? Is it not worth it? I think it is.
It's just that people are not aware of these numbers. Like, even I didn't know, like 10 basis point would cost me so much money. It's just, who cares? It's just 10 basis points, right?
Right.
But when you actually see the numbers, that's when it makes a difference.
Correct.
Another last question. Do you guys operate online or do we have to come in person? If someone has to, like, have mortgage questions or want to apply, do they have to come in person or a phone call is good?
We do have virtual offices and people are able to help out everything over a phone call, or maybe if you want to have a Zoom meeting. We do have 12 locations. We have 4 locations over here in Calgary itself. So if we are always welcoming our clients if in case they want to meet in person. I think sometimes when you have a branch and people, if they want to meet in person, I think it creates a different rapport with them. Sometimes people want the other side to have a face. They want to put a face on that voice, right? So we do have branches across the country. And but yes, as long as when it comes to getting the transaction or getting something helped on to the client from the client's perspective, we can do everything online.
Okay, that's good to know because usually these days people prefer online. It's much more convenient.
Right.
But you have both the option.
Right. Correct.
Whatever suits you. But this was an amazing session. I got to learn so much about mortgages. Usually I'm not the finance person in my house, but this was a good opportunity for me to learn about mortgages in general, and you were amazing. Thank you so much.
Thank you.
And as we already discussed, True North Mortgage is born in Calgary. Is started by one of our fellow Calgarians, which just excites and makes me so much happy. And I would always, want to support our Calgary businesses, Calgary startups. So I hope you have loved this episode and found something new to learn, just like I did. And please leave your comments down below. What were your thoughts? What were new things that you got to learn or anything? And I would love to hear from you. And make sure you like and subscribe to the channel. And I'll see you in the next one.